Okay, hello everybody. Welcome to Korean Atlanta Mentorship, and we're gonna react to a news story today from NBC10 Boston. Did you know I've never been to Boston, but they have a very interesting story. More consumers making minimum credit card payments, and this was from 5 days ago. So let's see what's going on here. Okay, so I'll play this and let's get started.
Millions of Americans struggle to keep up with their credit card payment. A mistake many consumers make is only paying the minimum balance.
But experts warn this can be worse than not paying your credit card bill.
Okay. All right. That's very interesting. So, making the minimum credit card payment can be worse than not paying the bill. Whoa. I think, let me think about that for 1 second. I think that's the first time I've ever heard that. So, why would paying the minimum be worse? And because if you have 20 to 30% interest, it's just all the interest that's accruing from making the minimum. So, if you don't pay it all, well, you don't have to pay the principal or any of the interest, and then you'll just get bad credit, right? So maybe if bad credit is worth it, sure, go for it, right? But that's an interesting take. So let's keep playing.
Consumer investigative reporter Bianca Beltran shares how you can start chipping away at your debt.
A record number of consumers are only making the minimum payment on their credit cards.
Growing share of Americans are not able or barely able to pay their credit card debts.
The report by the Federal Reserve Bank of Philadelphia also revealed an increase in the default rate. This indicates the percentage of loans that have not been paid.
I find it funny that the Federal Reserve knows this information. Like I've heard even as far as like 2014, they had a study about like how the average American could come up with $400 in savings. I thought that was insane. And this was 2014 when supposedly things were good, right? And they just know, and there's no real effort to kind of do financial literacy in the general public, right? It's crazy how the system knows you're broke and they just don't do anything about it.
That number is higher than what was seen during the pandemic.
The share of delinquent credit card balances.
Hold on, let me go back. Let me. I think that's crazy too. Hold on, let's replay this.
This indicates the percentage of loans that have not been paid. That number is higher than what was seen during the pandemic.
The share of delinquent.
So basically, when nobody could go to work, somehow people had the ability to pay their debts. But now that people can go to work, people are struggling to even pay it at all. That's crazy, right? That's crazy. That's probably like another form of Parkinson's law of money in a way. But the fact that people are actually struggling more back during 2020, 2019 is insane. Okay, yeah, that's insane.
Credit card balances is also elevated and near a 12-year high in our data.
According to TransUnion, the average credit card balance is just over $6,000.
Ooh, $6,000. Now, here's the thing. What if there were a system in which you made more than the minimum payments on your credit card? Maybe you dump your entire paycheck into it and possibly take your expenses out. I wonder if it has a name. Is it called velocity banking? I don't know. Just ignore what I said. But that's the crazy part too, is when we do these velocity banking demonstrations, we always do like $50,000, $60,000 credit card debt. The average person only has like $6,000 of credit card debt and they're still struggling. Isn't that insane? Isn't that insane? In fact, let me just do this. Okay. Just going to show you the bank rate, minimum payment, credit card calculator, right? So let's do this. $6,000 average balance. Okay. And I'm just going to keep playing.
Make only monthly minimum payments at a 20% rate, and you can.
So if we have a 20% rate, right? Let's just do this. 20%. Whoopsie, how'd that happen? The computer's going crazy on me. All right, let's do this. 20%. Calculate. It's only $160 payment. It's only $160 payment. Look at this. Oh my goodness. Oh, but dump your entire paycheck in, or you might have to pay $9,000 of interest, which is really more than 100%, right? $9,000 of interest. Ugh. All right.
Could be in debt for more than 18 years. Not only that, you'll be paying over $9,000 in interest. Experts recommend paying at least 2 to 3 times more than
2 to 3 times more? Why not put the entire paycheck into the credit card? Do we have a system for that? Interesting.
the minimum amount, or signing for a balance transfer card with a 0% interest term. Experts say you could pay about $300 per month and knock out the average credit card balance in 21 months without owing any interest.
There are more and more consumers that have at least one or two maxed out credit cards. So it certainly is not something that should make you feel bad. It's just something that you should have a strategy on and just start really looking at ways to seeking out counsel for it.
Bianca Beltran, and
All right. So strategy, AKA, we got one. It's called velocity banking. Velocity banking. But it's crazy
Something
how
you should have at least one or two maxed out credit cards.
if the average person has one or two maxed out credit cards and they only have $6,000 of credit card debt, don't you think they can easily get rid of it? I mean, I feel like, but again, most people, it's like they fell into a trap and they don't know how to get out of the hole, right? And they feel because, again, our society conditions us that we need savings. That's why we don't dump the whole paycheck in. But more and more people, they're making only this minimum payment for $6,000 of debt, and you know you're gonna pay about 100% interest or more than 100% interest over whatever time period this is, right? So, but it's actually not that much. It's really not as much as you think it is. Like the whole 20-30%, that's yearly. So if you dump your entire paycheck in, it's not that much. Dump your paycheck in, expenses out. Is this an advertisement for velocity banking? It might be, at least for me, right? Why not? Why make the minimum? Why struggle more when you actually have a job than in 2019 and 2020 when you couldn't, right? But let's check out if we have any interesting comments. All right. The banks love that. They make their money on the interest. I saw a segment on 60 Minutes a long time ago. Lenders call people who pay their entire bill every month deadbeats because they don't make interest off of them. Yep, that's how they make the money, right? I only have one credit card. It's got a $1,000 limit, and I make sure it's never maxed out. I also make sure I never miss payments on it. I intend to use it mostly for emergency payments. Why not use it as your main operating account, sir or ma'am, or whatever you want to call yourself? All right. Well, people don't have enough money. That's kind of true, but banks don't lend money to people who need it. Got to think about that as well. All right. Well, that's it for today's reaction, or this reaction today, about how people are just making minimum credit card payments. And, if we had a list of 10 commandments for paying off debt, commandment number one is put your entire paycheck into your line of credit, right? AKA one of your credit cards. All right. Or actually, that's not true. I just misspoke. All right. Well, that's it for today, folks. Korean Atlanta Mentorship reacting to NBC10 Boston, even though I've never been to Boston. Have a great day, everybody, and I'll see you all in the next video.